Jason, thanks for joining us today. Very good to see you.
Good to be here.
Infratil is one of our biggest listed companies, but really you're an investor as well, aren't you? Just like many of the viewers today. So can you tell us a little bit, for those not so familiar with the name, what is Infratil?
Yeah, it's a good question. Infratil is a bit different from other listed companies for sure. We're a global infrastructure investment company, so we invest in other companies. Generally though, we're taking controlling stakes or owning all of them. Generally they're unlisted companies. And what we're trying to do is take those infrastructure or essential services companies and blend them together so you get a mix of very solid, what you'd expect from something called Infratil or infrastructure type return, but with growth opportunities over the top that achieve a blended return. In our words, we talk about a blended return over 10 years of 11 to 15%. In fact, our track record is much higher than that over a 30-year period. It's more like 18%. But yeah, it's that blending of infrastructure companies, control positions, and they're unlisted companies is the other thing to mention as well. So they're companies you can't buy yourself on the stock exchange, although there might be competitors who are listed.
Sure. And you mentioned the 30 years. It's a pretty long track record. So has the investment strategy of Infratil changed much over that time, and are there certain sectors that you're liking at the moment?
Yeah, it definitely has changed. I mean, we started 30 years ago, obviously the world was quite different and the stock exchange was different. So we used to, when we first started, invest in minority stakes, so small stakes in listed companies that you could do yourself. The model's evolved, as I've said before, now to mostly unlisted assets, mostly control or full ownership positions. In the old days, we were very much in what we call core infrastructure, so ports and hydro generation. Now we're very focused on what we call kind of modern infrastructure, so digital infrastructure like 1NZ and data centres, renewable energy generation all around the world now. And we've just started investing in healthcare, so we're looking ahead to the types of things modern societies will need for the future.
Sure. And some of those names, across your fantastic portfolio, we're all familiar with, like 1NZ, Wellington Airport, but there's lots of names that people probably aren't so familiar with. So is there one or two that, stand out for you that people might not have heard of, but they should be thinking about?
Yeah, when I think of New Zealand investors, everyone knows the local names, everyone goes through Wellington Airport. But actually, a couple of the big drivers of the portfolio are overseas now. And they kind of sit a bit in the background. One I would talk to is a business called CDC Data Centres. Data centres are big warehouses that hold servers, computers that basically run our daily lives now, and they're certainly essential to it. So they're based in Australia, started in Canberra, that's the C in CDC, but all around Australia and in Auckland and New Zealand now. It's the biggest Australasian-owned data centre business in this part of the world. So that's one I would name. The other one that's another really important part of our future is one in the US that we established 6 years ago called Long Road Energy. And they build wind and solar farms on a massive scale. Hectares and hectares of these things, 3 million panels a pop. You just know we need more of those things, and they're in the hottest market in the world for building those sorts of projects, and that's going to be a real big important name to know if you're an Infratil investor in the future.
Yeah, it's interesting, those ones. Those are really those infrastructure names of the future, aren't they? Not sort of the traditional infrastructure like you mentioned at the start.
Yep.
And you've recently just released your FY23 results. Anything that stood out there, or any highlights you can touch on?
Yeah, I think over the year, one of the most important transactions was to do with Long Road Energy. We sold a minority stake in that business, which showed people what those businesses are worth now, given the massive momentum in that industry. I think the share price moved nearly $1 and a bit just on that one day. So you wouldn't want to miss that. I think in terms of earnings overall as well, it was nice to be talking about earnings growth again. In the past, we've been talking about falling interest rates and valuations just going up. But actually, we saw across the portfolio good earnings growth, nearly double digit across everybody. And then with that momentum that we're seeing in all of those core operating businesses, particularly 1NZ, but also a little bit the healthcare businesses, where we're guiding nearly double-digit earnings growth over the next period as well, based on what we see now.
And thinking about your portfolio into the future, are you comfortable with how it's set in terms of your sector exposures? Are there certain sectors? I know you called out at that result some of the clean energy opportunities into the US and Europe. So if you're looking forward, where's the next sort of round of investment for your business?
In terms of stuff that's within the portfolio, there's so much going on within digital infrastructure, particularly that data center space, and in businesses like Longroad that we've set up in Europe and Asia and now Australia that we want to grow into long roads in the future. Those really are the focus, I think, for now. When we think of what's going on in the market and what other stuff you would stretch into, digital infrastructure again really comes up as a really interesting area where we can use our kind of early mover status in that sector for infrastructure investors anyway, and the experience and track record we've built up there to access deals at terms and in ways that are better than just someone turning up to an auction and trying to buy things. So those are still the areas.
So it's fair to say you're seeing enough opportunities in the companies you already hold for future growth rather than having to
shop around for new stuff. I think that's right.
Okay, absolutely. And I just want to change tack a little bit and get your view on markets. Obviously, lots of viewers will be investors in their own right. We've seen valuations over the last 12 to 18 months come off with what central banks have been doing, talk of recession. How are you feeling about valuations today and, I guess, growth prospects in some of the markets that you operate in?
Yeah. So we mainly work in private markets. We're a listed company, but the things we're looking at and where we sell those assets when we think they're mature are in unlisted markets. And unlisted markets just don't move as quickly as listed markets have. So we're still seeing actually decent valuations in that part of the market. They've dipped down. But the private markets is also, because it hasn't suffered that severe dip like listed investors, they are already, I think, reacting quickly to the growth signs that we're seeing in both that digital infrastructure space, particularly with the kind of shocking arrival on stage of AI and what that means for the infrastructure we need. So we're seeing valuations in digital infrastructure rebounding quite strongly, a lot of growth expected there, which I think is valid. But also in renewables, particularly as governments are reacting and putting more and more effort, subsidy into that space, you're seeing valuations there pushing quite strongly as well, and a lot of interest backed by a lot of actual growth stimulated by these things. So in the US, they passed landmark legislation, the Inflation Reduction Act, which is really pushing money and growth into that sector. But that's happening everywhere in the world. The Philippines and Thailand released their biggest ever auctions for renewable energy that our businesses are well positioned to take. So those areas were strong before they had come off, but because of the growth being fueled by those tailwinds that have accelerated, not decelerated, we're seeing good growth and good valuation support in those areas still.
And you're not always a buyer of businesses. You're also a seller at some point in time. Can you talk us through how those decisions or those sort of life cycles come about? When do you look at a business in terms of looking to offload it in its total life cycle?
There's usually a couple of reasons that come up more often than not. One is to do with whether or not the business in particular can scale to be relevant in the portfolio. So with our market cap now, you really have to be a sort of $1 billion plus type sector to be meaningful to us as shareholders and where that share price is going to go. So if we feel like the sector is not going to be able to scale to that level without significant investment that we could direct elsewhere at more attractive returns, that's when we will sell it. So that's one. And the other one, which would be nice if it came up more often, to be honest, is where the external market will pay you for many, many years of development, well beyond what you expect actually to be able to do within the market. And we've seen that in Australia with renewables businesses. We sold Tilt Renewables maybe 2 years ago now. It's a very attractive sector with long tailwinds. We often get asked, why did you sell that? And the answer was because the market was paying for 5, 6, 7 years of projects being delivered on time in that market, when we knew, given the issues that market has, particularly with transmission, that was very unlikely to happen. So when the market's giving you more than you think the asset is worth by some margin, then you should be rational and sell.
I'm going to ask you to look into your crystal ball a little bit here, and I know you're all around the globe, but let's bring it back to New Zealand for a second. Inflation is still a real issue, whether it's for households, whether it's for businesses. How are you thinking about inflation and that trajectory over the next few years? Certainly the Reserve Bank has put pause on those hikes. They're confident that we've reached a peak. Are you seeing that in some of your businesses? And in terms of your investment strategy, is that what your base case is, that we get back to sort of somewhere in the realm of normal over the next few years?
That feels right, doesn't it? Although I think there will be a new normal. Maybe there's another up before we get down to the new normal. Seems to be the consensus. Immigration probably one of the wild cards there. So I think that is right. It does feel like the risks are more to the downside than the up, although you still have to be wary. It does feel, though, like for a longer period of time, inflation and interest rates will be allowed to be higher for longer than we experienced in the past. So that's kind of what we've got in our mind when we think about how much debt we want to borrow. We haven't got much at the moment because of some well-timed sales. And then how much debt you would use to buy new things is kind of on our minds, I think. Catering for a longer tail of higher interest rates and higher inflation.
Because that return equation changes quite dramatically depending on what it costs you to borrow money, doesn't it?
It does, and also how much yield you need out of your investments to service that borrowing versus being able to reinvest that for future growth, which is where the real compound returns remain. So the maths does tilt back in favour of getting the money out, but that comes at a cost of the future compound growth that you would otherwise have had.
Yeah, I think that's certainly... one thing I see is that we get a little bit excited about inflation coming off the boil, and everyone says, hey, look, this is great, but the numbers are still very, very high compared to where we ultimately need to be. So it's probably a slower burn than we all expect.
Slower tail off, I definitely would agree with that.
And before I let you go, I want to ask you one more question.
Yeah.
Just thinking about your own advice you might give to a viewer who's potentially not been investing for a long time or hasn't invested at all yet. Any pieces of advice of what you might look for, anything that has stuck with you over the years in terms of good sage advice on investing?
I think the best advice I've read, and there's a lot of advice out there, would just to be consistent, right, and think long term. So certainly if you're fiddling around with your portfolio all the time, I think that's very hard to win. The best returns will certainly come from investing over the long term. Finding something you can reinvest in over time and get that compounding effect is incredibly powerful. I'm sure that's what advice you give you guys as well, but I think it's as true as it ever was.
No, it's always good to hear those same messages, regardless of if we're saying them or not.
Yeah, exactly.
Look, Jason, thanks very much for your time. Really appreciate you coming and joining us and giving a little bit more insight into the Infratil business.
Of course, thanks for having me.